Imagine this. A man walks into a luxury car showroom in Miami. No bank loan, no financing. He pays $250,000 in cash for a Lamborghini. The salesman doesn't ask questions. The bank doesn't stop it. The system doesn't block it. The money looks clean. The transaction looks legal. The car is registered. The paperwork is perfect. But the money came from drugs. This is not a movie scene. This is real America. And it all happens because of one invisible system: money laundering. Turning illegal money into legal-looking money. Today, I'm going to explain what money laundering really is, how it actually works, why it's so hard to stop, how normal businesses are used, and how the system hides illegal money in plain sight. By the end of this video, you will never look at money the same way again. Money laundering is not about criminals hiding money. It's about changing the identity of money. Money from drugs, human trafficking, corruption, fraud, scams, cybercrime, black markets is converted into money that looks legal, taxed, registered, invested, normal. The goal is not just to hide money. The goal is to change its identity. Whenever a politician gets caught for money laundering, you can assume one thing: they used an old, proven trick to clean dirty money. But how does money even become dirty? Especially when, in places like Canada, they even have washable bills. Imagine this. You suddenly make millions of dollars, but you don't want to pay taxes just because you're rich and don't feel like it. So what do? Instead of reporting that money to the Internal Revenue Service, IRS, you move it into an offshore bank account. Then you use that money to buy a house from Jeff Bezos. Now the property is legally yours, and once you own it, you can take out millions of dollars in loans using that property as collateral. Since the money you receive is a loan and not income, you don't have to pay income tax on it. This kind of real estate bait and switch is a classic way to clean cash. So how common is this? According to the United Nations Office on Drugs and Crime, between $800 billion and $2 trillion is laundered every year. That's about 2% to 5% of the entire world's GDP. So what is money laundering in simple terms? Money laundering works in three main stages. 1. Placement. This is where dirty money enters the system. Example, a drug dealer has $1 million in cash. He can't put it directly in a bank. That would trigger alarms. So he breaks it into small deposits, uses fake businesses, buys assets, uses cash-heavy stores, car washes, laundromats, bars, nail salons, gas stations, casinos. Why? Because cash looks normal there. 2. Layering. In this step, the money is moved through many different transactions to make it harder to trace where it originally came from. This is where money is confused. Transfers, shell companies, crypto wallets, offshore accounts, fake invoices. Money moves through 10 to 20 accounts, different countries, different names, different companies, so no one can trace the source. 3. Integration. Now the money comes back into the main economy in a legal form. You can invest it in a business, or buy a $10 million painting that has nothing but a single splash of paint on it. Yes, money laundering happens a lot in the art market, and just like that, you're officially a money launderer. In fact, money laundering is a key part of how terrorist activities and drug trafficking operations survive and succeed. Now let's look at some of the most common methods used to do this. In Colombia, some business owners want to import goods using US dollars, but the government charges taxes to exchange pesos into dollars and also adds tariffs on imported goods. And let's be honest, wealthy people usually don't like paying extra taxes, so they go to black market peso brokers. These brokers exchange the money for a lower fee and keep the transaction hidden from the government. Here's where the money laundering part comes in. A drug trafficker gives dirty US dollars to a peso broker. The broker then uses that money to buy goods in the United States and sends those goods to Colombian importers. The importers sell the goods in Colombia and pay the broker back in pesos. That's how the dirty money gets cleaned and moved. This method breaks a large amount of money into many smaller amounts. In the US, banks must report deposits of $10,000 or more to the Internal Revenue Service, IRS. So criminals deposit amounts smaller than $10,000 to avoid triggering reports. Different people called Smurfs deposit these smaller amounts over time into one or more bank accounts. Money is sent to countries that have strict bank secrecy laws. These countries don't easily share banking information. The money stays hidden unless a journalist or investigation exposes it. Shell companies are fake businesses created only to launder money. They pretend to sell goods or services, but in reality, nothing is being sold. They create fake invoices and fake financial statements to make the transactions look legitimate. Some launderers put dirty money into real businesses. For example, brokerage firms, casinos, bars, or car washes. They either mix the dirty money with the company's real earnings, making profits look higher than normal, or they simply hide the money in business accounts and hope no one checks closely. In the 1980s, Eddie Antar, owner of Crazy Eddie, took millions of dollars out of his company to hide it from the IRS. Later, he sent that same money back into the company as fake revenue to increase its value before an IPO. An IPO, initial public offering, is when a private company sells shares to the public and becomes publicly traded. Antar made multiple deposits in different banks, moved money to Panama, where bank reporting laws were weaker at the time, and then slowly transferred the money back into the company's official accounts. As a result, the company's value increased by $40 million until he was eventually caught. He was sentenced to 8 years in prison. Every year, about $2 trillion is laundered worldwide. Morally, it allows criminals to profit from illegal activities. Economically, governments lose tax revenue. To make up for that loss, they often increase taxes on legitimate businesses and citizens. Law enforcement agencies focus heavily on drug trafficking and terrorist organizations because money laundering helps fund and expand those operations. But tracing money isn't easy. Trillions of dollars move through wire transfers every single day. Figuring out which money is clean and which is dirty is extremely difficult. In recent years, international organizations have focused more on the connection between terrorism and the art market. Real estate transactions usually have legal requirements and documentation. But the art world has far fewer regulations. Someone can sell a plain white canvas for $30 million, and very few questions get asked. So, what do you think? Which other industries might be supporting money laundering? Comment below, we'll pin the best answer.